Now, shares of South African banks fell today after ratings agency Moody's ratings downgraded the country's 4 major banks. It cited a lower likelihood of support from the central bank to protect creditors in the wake of African banks' debt crisis. The banking index was down 1.2% shortly after trade began. Well, chief economist at Econometrics, Dr. Azar Jammine, joins us now to get some perspective on the implications of the downgrades. Azar, thanks for coming in.
Pleasure.
All right, before we get into why the banks were downgraded, perhaps you can tell us what really is the effect of a downgrade on a bank and its customers, if any?
Well, in theory, it means that customers should feel less confident in the bank going forward. It means that people who lend to the banks will also be less confident in lending out and will probably be more demanding in terms of the cost of their what they lend out, the interest rate maybe. But in practice, the reality is that our 4 major banks are still extremely sound. They are more sound than most of the banks in the world. Their capital adequacy ratios are well in excess of the guidelines set by the Bank for International Settlements, to which most banks are answerable. So really there is nothing to worry about. And in fact, Moody's, in making the downgrade, did not actually cast any aspersions on or doubts on the health of the banks.
Let's talk about that, because that's exactly what they said. They said the banks were capitalized healthy in many ways, yet it said that the South Africa's Reserve Bank failed to protect the customers of African Bank. And looking at its intervention last week with the bailout, it raised questions about the likelihood of quality future support for other banks if they need it. So on the one hand, you're saying the banks are healthy, but the likelihood of the Reserve Bank saving those banks is not there. What did you make of that reasoning?
I think it's precisely wrong. I think the Reserve Bank's response was the right one. It tried to mitigate any major damaging effects on the economy and took a decision to cut the value of the loans made by many large institutions to African Bank by 10%. Now that's not a huge loss. People also who owned money market instruments lost 0.3%. That is not a huge loss. It's not breaking the system, but it does show that there is some cost in actually lending money irresponsibly, and someone's got to pay for it somehow. And so I thought they did a very good job that way. They prevented systemic risk for the whole economy from occurring, and yet at the same time got a message across: be careful, don't lend out too quickly and unscrupulously and without any sense of responsibility on the belief that we, the central bank, will bail you out every time. There will be a cost to that. And I think that was the right thing. And what Moody's are trying to say is, let the Reserve Bank save the commercial banks at any opportunity. Well, the commercial banks will then could go berserk in lending out money irresponsibly, knowing that Big Daddy will bail them out.
But you suggest that that cost is minimal. There are those that say, well, the Reserve Bank should have done more to explain what they mean by giving the bondholders a 10% haircut, for example, and perhaps they should have done more there, and that's why Moody's reacted the way they did. What do you say to that?
There may be an argument for that, but one has to realize that in circumstances of the kind that the Reserve Bank was in, where it suddenly had this default over a weekend, it had to move very quickly. And it's not the easiest thing in the world to try and appease and answer every question about why you're doing what. Their primarily objective was to try and stabilize the system and prevent any major fallout, and I think they succeeded a lot. And the fact that banking shares have fallen by 1.2% today on the back of this is neither here nor there. It's certainly not a 20 or 40% collapse in those share prices.
I take it you would still believe then that the Reserve Bank should have not acted differently with regards to African Bank?
I think it was a fairly ingenious way in which they reacted to African Bank, and I think they did a very good job out of it. And if anything, I think one should have even more confidence in the Reserve Bank now than than before the African bank debacle. There were, of course, problems that one could foresee in the African bank model years ago. But I don't think the Reserve Bank felt it was its role to start intervening in a business decision that was being made at the time.
It doesn't appear, though, looking at the remarks from Moody's, it doesn't appear that they will shift focus or shift perspective, rather, on how they downgrade. I mean, their reasoning still stands. What's the future look for you in terms of downgrades and these banks?
Well, what has been very interesting here is that Standard & Poor's and Fitch credit rating agencies, the other two, are sitting on their hands. They haven't done made any move. So I think it's a very peculiarly Moody's related downgrade. And there has been a lot of skepticism about ratings agencies since the 2008-09 recession, in which a lot of banks which were AAA graded suddenly were facing default. And I think part of the negative response I would have to this is that, why were they not downgraded dramatically thereafter? In fact, the American government and central bank had to bail them out. And that is what is known as moral hazard, to become too big to fail. And that we don't want that, because that is not conducive to imposing discipline on lending.
Azar, before I let you go, quick word, sticking with the Reserve Bank but shifting focus. We had consumer inflation figures out today, 6.3%, a bit short of what analysts had expected, but you still had core inflation rising a bit and the month-on-month inflation rising. Could the Reserve Bank look at this and say, let's hike rates?
They may well use those examples that you've given as an excuse for hiking rates, for the simple reason that they have pushed themselves into a corner in this regard. They have told everyone that we do still intend hiking rates because inflationary pressures are intensifying. And so I think there's a chance that they will go ahead with a 0.25% rate hike at the next MPC meeting. But there's no question that the rand has stabilized, inflationary pressures are receding, food prices, especially the price of maize, has fallen by 60 cents a litre, and we're looking at a cut in the petrol price next month of more than 70 cents per litre. Under those circumstances, I wouldn't be too worried about inflation right now.
All right, thanks very much indeed. Econometrics Chief Economist Dr. Azar Jammine, thanks for coming in.